Hey YouTube, so welcome back to another video. So this one will be covering sort of what my uh, dividend portfolio brings me in for monthly dividends. Obviously, this is still on the newer side of things, so I am still kind of rebalancing my positions and still creating that like core of what I'm doing in this um, brokerage account. But kind of wanted to just dive through my mindset, give you guys a quick overview of how much my portfolio will be bringing in on a monthly average basis, and then explain sort of why I've taken this approach. So if you kind of start to look right now, obviously that was at the end of August. I'm now at 51,000. But you go to my dividend calendar. So this is kind of how my account has been breaking down on a monthly basis. I really didn't start paying attention to this brokerage account, as I've mentioned in previous videos, until really the middle of June, and really started taking this a little bit more serious. This is when I started adding positions like SCHD, DGRO, and UNH, and yeah, but predominantly prior to that, I really only focused on investing a lot of money into FXAIX and then a bunch of these other smaller positions that I'm in kind of the process of eventually selling and all that. But yeah, so on a monthly basis, I really just started investing into SCHD. September will be, without a doubt, my highest dividend month so far, just because I've significantly increased the amount I've invested into SCHD. I added DGRO and so on and so forth. But yeah, I'm bringing in roughly, um, in June, when you look back at it, SCHD, I brought in $12.62. I think that's going to be significantly higher moving forward. But when you look at total for the year, I've at $144.18. Now, with that being said, I've invested over the past few months. I've invested, um, let's see how much I've invested actually. So, as you can see, in September, I've invested nearly $2,000. In August, I invested an additional $4,400 into my brokerage account. In July, I invested $8,800, and in June, I invested $5,700. So I've invested a fair amount of capital since then. So these dividends are going to increase pretty substantially. Um, and so when you look at my portfolio as a whole and you look at my dashboard overview, my current portfolio value is at $51,852.16. And my estimated yearly dividend income is just shy of $900. So if we go over here, you look, $900 divided by 12, that's roughly $75 per month that I'm bringing in dividend income, which is great. It's a great starting point. I'm really happy about it. I'll probably go at some point, once I finish up with this year and the dividend calendar, I'll probably throw in just a little box here to just say like, oh, what was my average monthly breakdown? And then in my dividend history, year over year, I'm going to be able to kind of look back at that and see how that's changed over time. But yeah, so right now it's $75 on average per month, which doesn't seem like a lot. That's totally fine with me. It's kind of with the approach that I'm taking in this portfolio. But you know what? That covers, like my coffees for the month if I go out and buy coffee a few times a week or whatever. So I'm totally happy with where that started. And, if I didn't invest anything else and just started pulling out those dividends, I virtually am getting free coffee due to the investments that I've put my money into. So right now, my portfolio dividend yield is just 2%. And that's really because I'm focused on three main positions: FXAIX, SCHD, and DGRO, which are all kind of dividend growth stocks, or I guess DGRO and SCHD mainly are. FXAIX just is a mutual fund following the S&P 500 for Fidelity. So it's not necessarily like the dividend stock per se, but it brings in a substantial amount of annual income from my dividends. And so you really look at those three positions. So DGRO is $170, SCHD is estimated around $330, and then FXAIX is estimated around $150 per year. And so the reason why I'm really focused on these three positions, I'm 30 years old. I anticipate working till I'm roughly around 60. I would like to retire a little early, but right now that's sort of my game plan. And so with these positions, I can handle lower dividends right now with, you know, consistent dividend increases over time. And I really also want to just take advantage of the growth with these positions. So, you know, I can, since I have a 30-year time horizon right now, I can withstand some of these downturns that are inevitable, just so that I can take advantage of that average annual increase in the stock market of 8 to 12%. So over time, I think that'll pay off more than, you know, focusing on high yield positions in this current market. And so, you know, you look at, I pulled up this website, but dripcalc.com. And so this is just kind of hypothetical. Not everything's exact, but, you know, you look at SCHD. If you have that initial investment of $10,000 and you're investing an additional $1,000 every month with this share price increase and annual dividend increase in this range, you can see that your value of your account can be almost $5 million by the end of it, and your annual dividend income that you're bringing in is roughly $220,000. This is obviously including reinvesting all these dividends into the position, but this is something that I could see myself sticking to in a plan, and maybe it's not fully 30 years. Maybe I'm happy with $160,000 per year or whatever. Or I want to start taking some of that that balance of the position and pulling some of that out along with my dividend income. But ideally, I can just live on my dividends and continue to invest in these positions. That's something that I could, you know, pass down to future generations if I have children, and so on and so forth. So, yeah, that's kind of why I'm focused on these positions. I really want to take advantage of growth. You know, I pulled up JEPQ, but this obviously has a higher yield in the short term, and you know, if you do the same thing, like clearly you're going to be receiving annual dividends at a higher rate per year compared to SEHD. However, I think some things that kind of can get forgotten about is that, you know, it typically has a lower growth rate, lower dividend growth rate, lower share price growth rate. And so you're not really able to take advantage of all that upside and that time that you allow just your money to work for you, and take advantage of those downturns and let that, you know, share price growth drive you to your end goal over a 20, 30-year time frame. I feel like this is more so for those that need that income in the present day or within the next 0 to 5 years. So I don't feel the need to necessarily invest into a position like this. Obviously, this is a hypothetical, so it's saying 30 years down the line, it could be worth $13 million. I think that can sometimes be a trap, and people think that that's actually a reality. But you know, you look at all these high yield ETFs that are out there. I think one thing that can get forgotten about and can be sort of a trap is forgetting that there's some NAV erosion that could happen. You know, if you look at this on Seeking Alpha, you know, at some point in time, positions like JEPQ and these high yield positions, they can reach a saturation point, and the new fund inflows will no longer be sufficient to cover those big cash distributions that they have. And so eventually these positions may have significant losses, and then all of a sudden your positions start to lose value over time, and hence the NAV erosion. This article was written by this guy right there. But yeah, I think that that's something that you need to be wary of, and something that this calculator doesn't necessarily take into account is that there more than likely will be NAV erosion with these positions. And, you know, it could end up like a position like ulti, where all of a sudden everything's looking great with these high yield ETFs, and you're feeling good about what you're bringing in on a monthly basis for your dividends, and all of a sudden that $20 share that you bought slowly gets eroded, and boom, you end up at a $5 share price compared to 20 when you initially put it in. So I think it's something that obviously for me, I just don't feel super comfortable with, and I don't feel the need to invest in these positions. I don't have a need for this dividend income right now. I'd rather invest into other positions that that don't focus on this covered call strategy, and invest in companies that have long-term appreciation of their stock value, as well as increases in their annual dividends. Because I think that those are some of the companies that I can grow alongside over 20 to 30 years. So that's why I invest into positions like DGRO, SCHD, and FXAIX. Now, with that being said, I do have some of these like core positions and all that I'm also investing in, but over time things will change. Right now I still have a bunch of stocks and some that I'm going to be selling that I haven't just sold yet. Both winners and obviously some nasty losers, but that was obviously investing that I had done prior to really ever paying attention. So gotta figure my stuff out, but yeah, over time I'm gonna rebalance my portfolio, and I'll probably add in some of these high yield positions when I'm closer to retirement age, just to take advantage of the higher yield. You need a lot less invested into each position to return a larger dividend. So I think that's something that I will look at and review down the line. But right now, I think it's more important that I take advantage of the growth of these positions. And obviously, the increasing dividend is nice. And maybe one day I'll be able to just live off of those annual dividends and keep my position, but I also want to take advantage of the growth. And so if I do ever need to sell out of these positions along with living off the dividends, I can, and do kind of a mix of both. But yeah, I think at some point maybe I just stop reinvesting necessarily into these same positions and invest into cover call ETFs, or like JEPQ or JEPI or anything like that. But right now I just don't feel like that's necessary. So that's why I kind of have this low dividend portfolio yield, and my dividend income, yearly dividend income for how much I have invested isn't extremely high. Obviously, one thing that I often think about too is, and maybe a lot of people in the market are doing this, but you look at how much I can get in this money market account with a balance of roughly $100,000. I'm pulling in $300 per month. So obviously this won't last forever. And so maybe people are sitting on the sidelines, not investing into positions like SCHD, DGRO, and everything because they are attracted to that higher income on a monthly basis. I still want to build these positions out and continue to invest in them for the long term. So I'm predominantly holding on to a lot of this money in my money market account and everything, taking advantage of some of these higher interest rates at like that 4%. But I am planning on buying a house and buying real estate in the near future, just kind of looking for the right opportunity to present itself. And that's why I have a lot of this money sitting there. Otherwise, if I was in a stable position where I knew how much my mortgage was every month and all of that, I would not be keeping necessarily as much in these high interest or money market funds or anything like that. I'd be investing more and would have a better idea of how much I need to keep on the side in my emergency funds and all of that. But right now I'm still kind of in this limbo area, and that's why I have so much cash on hand. I want to come in as a solid buyer and go from there. But yeah, so that's really it for this video. Kind of just went on a sideways tangent there, but yeah, my yearly dividend income estimate is just under $900 for a $51,000 portfolio at this 2% yield. Things can change. I can increase my portfolio yield, dividend yield, towards like 5%, for instance. And, by putting in positions like JEPQ and everything, and I'd have that rush, an adrenaline rush of, higher monthly dividend income or quarterly dividend income. And yeah, it would be great and all, but I think in the long term, I'm better suited to take the approach that I'm taking because I have 20 to 30 years plus, so I can take advantage of all this growth opportunity in front of me rather than potential NAV decay and less stock appreciation over time. And so, yeah, that's why I take this approach. I think it's the correct one right now. I'd be curious to hear what anyone else has to think, if they believe that, these high yield positions like JEPQ or any of these cover call strategies are a good approach for someone that has a 20, 30-year timeline while reinvesting in these positions. I don't necessarily know enough about those types of ETFs or anything, so I don't feel comfortable investing a lot of money into them. So I would love to hear if anyone does feel super strongly about it on their end, why they're investing in those positions. Please leave a comment down below. But yeah, this is the income right here, estimated for a $51,000 portfolio. So again, I'll probably update this video end of the year, kind of have a recap of what type of dividends I was able to pull in. Again, I really only started paying attention at the end of June into really July. So I think things will change dramatically into 2026, and my dividend income will be more accurate towards what my estimates are. But yeah, I'll just continue to build these positions, grow them out, and go from there. So that's everything. Please like, subscribe if you want to keep following along with any of this journey and see how this portfolio changes over time. Just as a little preview, here's some of my other positions that I have: 401ks, Roth IRA, in sort of like my total investable assets and my cash position. So right now it's just roughly over $400,000. And yeah, that's it for this, and talk to you guys soon. See you.